Welcome back to Bazaar Morning Call. Well, for now, the market actually is in very good shape. The Nifty is picking up more pace now, getting almost to that 17,900 mark. Just look at that. And if you look at the contribution plate, you'll realize that the big, chunk of the heavy lifting is being done by HUL, Bajaj Finance, Bajaj Finserv, so the Bajaj twins, and you have a couple of other names, Tata Consumer, and Reliance is back above 2670, so Reliance also looking pretty good. All right, Sterlite Tech posted yet another weak quarter. The company has seen its third straight quarterly loss. Margins are at 7.5%, sharply lower year on year, and well below the steady state of margin guidance of 16 to 18%. Ankit Agarwal, who is the MD at Sterlite Tech, joins us now to talk about that. Ankit, good morning and thanks for joining in. You know, the margins are the big problem, right? 7.5%. It's significantly lower than your steady state margin guidance of 16 to 18%. I agree there are higher freight costs, there are raw material cost pressures, etc. But how long do you think it would take before you get back to that 16 to 18% band?
Yeah, good morning. Thank you for having me on the show. So I think what we have been guiding so far is that certainly the cost pressures that you spoke of in terms of container costs, some of the raw materials linked to oil, as well as in terms of other gases like helium, etc. Some of those impact have come in on Q1 and Q2. And we've been speaking about impacting this, taking these price increases to our customers, especially across Europe and US. So we do see some benefit of that starting to trickle in into Q2 and certainly into H2 is where we are guiding that we'll see the improvement in the margins. And broadly, what we are seeing is that especially on our core business, which is the optical, we will come back to 20 to 22% Ebitda margins. And our services business, which is the second biggest business, will move from around 8-9% margin to around 12 to 13% margin. So this is how we see the margins improve. And certainly on a run rate basis, we do expect Q3 and Q4 to be stronger.
Q3 and Q4 to be stronger. Ankit, good morning. But I think earlier you had spoken about 16 to 18% as the margin guidance. When do you reach that number again?
So that's what we had guided towards H2. So certainly we are confident that overall basis, given this mix, about 70% of our business will be optical and about 30% of our business will be services. So that kind of combination of the two businesses will get us to 16 to 18% between Q3 and Q4.
That's on the margin. On the revenue itself, you're still lower than the pre-COVID revenues. And your guidance clearly looks, the 10,000 crore annualized looks unachievable. So what's the new guidance?
So what we have been guiding, rather than looking at 3 years, we are focused on the improvement on two elements. One is at the margins that we spoke of, and also in terms of cash and looking at our net debt levels at company level. So these are the two priorities for the business. What we have guided is that overall year on year, our top line will grow around 20 to 22%. So, roughly in the range of around 7,000 crores. So that's something that we are confident that we're tracking on the back of 2 or 3 elements. Number one being our volumes will continue to grow on increasing cable volumes and fiber volumes. Second is also growth of our optical interconnect business. And as that attach rate improves, our top line should improve. And as we see large projects coming on stream, both on the back of 5G and BharatNet, we see our services revenue improve as well.
Okay. The order book overall has been declining, right? I mean, even in this quarter, it declined about 4% compared to last quarter. Is there any reason? Is it specific to your company? Are you losing orders? Or is overall the client spends going down?
Actually, we actually recorded one of our highest ever order books. We actually booked close to 2,800 crores of orders, which was back of very strong orders coming in, particularly in US market and Europe. And then to some extent in India with some of the leading operators. What we actually did is on the back of our previous guidance and our strategy, we've actually written off some of our lower margin orders in our conversations with customers. So close to 1,600 crores of low margin orders we have written off. And hence you see the net number of about 11,200 crores, which is our open order book.
Okay, a word on your net debt. That also increased to 3,200 crores. In Q1 from 2,780 crores at the end of FY22. What's the outlook here?
Yeah, so that's what we are seeing, that on the back of very strong growth, particularly in North America, our working capital has increased. And so that's something that we're looking to do while we continue to grow in that market. We have close to 14% share now. We continue to evaluate in terms of our capex spend, which will be close to about 500 crores this year. And on the other side, we are clear that we want to reduce our net debt from here and bring it back to between 2,800 to 3,000 level. So that's something that we're targeting by end of quarter 4.
So when will you raise that 1,000 crores that you got an approval for in terms of a timeline? What are we looking at?
So that is just an approval we get on an ongoing basis, and we'll continue to evaluate. The focus right now is to generate cash from the business and then use that cash for either capex or for reducing the debt.
Okay. Your US facility will start contributing, right, from this quarter, I think. How much contribution do you expect from there?
No, the facility will come on stream in quarter 3. We're quite excited with that factory coming on board to serve and grow our presence even further in the North America market. So that will start in quarter 3 and scale up by quarter 4. So that's something that will further add. And overall, with all of this, our capacity will go on the cable side from 33 million fiber kilometers to about 42 million fiber kilometers, and will make us one of the largest players globally.
Oh, okay. Optically, you know, as you said, I mean, you're still reporting a loss, right, on the bottom line. And it's been 3 quarters of losses now. When do you think you can turn back into the black in terms of a timeline?
So that's what, in line with our first few statements, we definitely believe it will move in positive direction as we go into quarter 3 and quarter 4. And that's something that we are very closely watching in terms of margins as well as the cash. One thing I do want to highlight is that, from the market perspective, we clearly continue to see very, very strong tailwinds, particularly in terms of our conversation with telecom operators, both in India as well as globally, on the back of 3 trends. One is clearly on the back of 5G. We see next 3 to 4 years massive investment as more and more towers need to be fiberized. We also see a very large focus on fiber to the home connectivity, again, both in India and globally. And the third part is very, very strong focus from governments to now fund and subsidize broadband connectivity, like we have BharatNet in India, which is probably a $10 billion project. You're also seeing a $60 to $70 billion project in the US right now, again, to provide fiber to the rural parts of America. So these are very, very positive trends that we see very strongly, both for our fiber optic manufacturing business as well as for our services business.
Okay, Ankit, we leave it at that. Thanks a lot for joining in. It has been a challenging last few quarters for you, but you seem optimistic. So let's see the way forward from here. That's STL with the overall performance. The order book has declined, the margins are under pressure, but the management is quite confident that STL will improve going ahead. By the way, the Bank Nifty is in the red, so don't lose sight of that. ICICI Bank is dragging its feet a bit, although it is sitting at fresh 52-week highs. Today, I guess, just, marking time around these levels.
Absolutely, Sonal. I mean, the Nifty, though, is picked up, so it's basically a bit of a role reversal. Early on, the Nifty was kind of flat, slightly higher. Bank Nifty was looking a little better, but you got the Nifty now picking up steam, whereas the Nifty Bank is basically come back flat. Let me just take a quick look at what Nifty, the index is being kind of propelled higher by. Are there any outsized? Reliance is having an outsized influence. 12 points from Reliance, 12 points from Bajaj Finance. So that's, about 22, 23 points right there. And then there is HUL and Bajaj Finserv, which are adding another 14 odd points between them. So that's index points between them. So those are the top large 4 contributors to the index. Now, Quest Corp is the next company which we are speaking with. The revenue this quarter is up around 30%, but margins have dipped by nearly 100 basis points in the quarter. To discuss the FY23 outlook and the current hiring trends, we are now joined by Mr. N. Ravi Vishwanath, Group Chief Financial Officer at the company. Mr. Vishwanath, great to have you with us here. Thank you very much for being on the program. Before I come to what your thoughts are on margins which have dipped, have the strong trends in your recruitment business continued into the second quarter so far? What is that looking like?
Yeah, absolutely. The recruiting business seems to be on a tear, has been on a tear for the last almost about 6 quarters now, 6 to 7 quarters. We see that moving into Q2 as well. There was a bit of a lull in Q1 when the hiring sentiment was slightly lower. But I think that has gained momentum, that has picked up pace, is actually gaining momentum as we speak. We should probably see a very strong finish to Q2. And actually build on it from there for Q3 and for Q4 thereafter.
Okay.
Mr. Vishwanath, what about margins, which have dipped, as I said, nearly 100 basis points? Variety of things, right? I mean, there were salary increases, there was renegotiations. What's that going to look like in Q2?
I think we will start clawing margins back up. I mean, this is the lowest it can probably get to. I don't think it can get lower than this. There are some long-term investments that we've been making into, which are also actually being charged to the P&L account, and those should also start yielding results from Q3 onwards, not immediately in Q2, but from Q3 onwards, those should start yielding results. So overall, I would say we've kind of bottomed out as far as margins are concerned. All our businesses have turned around admirably well. There's nothing that's actually a cause for concern, except, of course, the operating asset management vertical or the segment for us, which still continues to give us some sleepless nights because offices are still not back to how they were functioning pre-pandemic. I think once that comes back to some kind of normalcy, we will see we will see the margins definitely inching upwards from here on.
Management vertical is giving you sleepless nights. What about the other two verticals, workforce management and global technology? What kind of growth do you see there, and what would be the triggers?
Workforce management has been a rock star for us for many years now. I mean, I won't even say quarters. It's been a rock star and will continue to be the pole star for us, actually. In the sense that, I mean, that's a business that has immense potential. The addressable market is large. We are the market leaders, and we will not be giving up. We will not be ceding any space in this particular segment in the general staffing business to anybody else, because we're clearly market leaders, and that continues to be on a roll. So that will maintain the same kind of growth, the same kind of momentum into the future as well. We are only gaining from strength to strength. Global Tech Solutions has been a very interesting part of our journey over the last few years. Has been a surprise package. And we will see. I mean, the call center business, which is Connect, has been on a tear. Has been on a tear for the last about 6 quarters now, and continues to maintain the same kind of momentum. That's good. Allsec, which is the HRO business, again has been doing admirably well. So between these two, I think, and of course the InsurTech platform of MFX has also been keeping pace with the other two businesses in the vertical. So nothing much to complain as far as Global Tech Solutions. We will maintain margins. I don't think will improve dramatically from here onwards. I think we will, if we can maintain the same kind of margins as what we have currently, I think we would have done a pretty good job.
Okay, so you told us about the margins and your growth targets, but you didn't give us any numbers. What is FY22? I think your revenues were about a little under 14,000 crores. What is the expectation for FY23 and 24?
You should probably look at the same kind of growth as the same kind of growth as what we've done in the past. I don't see any reason why the top line growth should be impacted in any manner whatsoever. The top line growth will continue to be will be good for us. The margin improvement, again, like I said, from Q1 onwards, from Q2 onwards, you will see an uptick in the margins as we move forward. So I think overall we are in a pretty good spot right now, Sonia.
In the product-led segment, will losses continue to come down? I mean, what's the guidance there?
The losses will not continue to come down for the current year. The losses will be at the same levels for the current year. By about Q2 or Q3 of the next year is when we expect the losses to start coming down. Because these are investment phases that we are into. We raised capital for investment into sales, marketing, and product development. And so we will continue to invest in those fairly heavily, both this year and in the early part of next year. So by about Q3 and Q4 of the next financial year is when we will start seeing it break even and kind of improving thereafter.
So, the margins continue to be a spot of bother, right? You said that although the worst of the margin pressures is behind, you may not see too much of an improvement from here. But you do have an aspirational target of 6% Ebitda margins, which is still low single digits by 2025. Do you stick to that, or would you change that? And why is it that despite a pickup in the business, the margin profile just doesn't seem to change?
The margin profiles have been impacted. Every now and then we have something impacting us. For example, the losses in the product-led businesses are not small. I mean, these are fairly significant amounts that we are investing, and these have impacted margins. The renegotiation of a large customer contract for us has led to a margin dip. So, but for these, I think overall, margins seem to be fairly, reasonably on track actually. So I don't see any cause for concern. If you just take the product-led businesses out, I think we should be able to get back to decent margin levels by about Q3 and Q4 of the current financial year.
Okay, just one final question. Do you have any plans to sell minority stake in Monster in order to sort of unlock value?
We did that, right? We raised external capital in Monster in January this year. We brought in external investors who currently own about 10% of the total cap. Of the total cap table is actually with external investors. And if some more money needs to be raised, we will not shy away from it.
Right, Mr. Vishnu. Thanks a lot for joining us. That's Quest Corp. By the way, on the market, the sector of the day now is the non-lending financials. Just look at SBI card. That's up about 6%. I think there was an important news on which kind of companies can be allowed credit cards. I think that perhaps is helping. So 6% higher on that. ICICI Lombard is up 4%. You have HDFC Life, which was up yesterday as well, is up another 3% today. And there's Bajaj Finserv as well. So basically the insurance, card companies, AMCs, this is the kind of space which is making a big comeback. This is a space where we had one of the highest corrections as well, and now making a big comeback. We'll take a break. We'll come back. Mitesh Thakkar will be back with us for some fresh technical ideas.
आग को फैलने से रोकना मुश्किल है पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
OLX ऑटोज ही देता है आपकी कार का बेस्ट प्राइस। सुनीता, सुना तुमने ये क्या बोल रहे हैं?
यही कि OLX ऑटोज देता है आपकी कार का बेस्ट प्राइस। ये प्राइस ही नहीं सरप्राइज है। विजिट olxautos.in।
मैडम जी, वो सारे पैसे लेके भाग गए और मेरा वड़ा पाव भी ले गए।
दिखाते हैं इनको।
वड़ा पाव? हिलर, निकाल दे इसके बाद।
पंक्चर के बाद भी इससे हवा नहीं निकलेगी, क्योंकि ये है JK पंक्चर गार्ड टायर, जो कील लगने के बाद भी होता है हील। JK पंक्चर गार्ड टायर, अब हवा नहीं निकलेगी।
2 साल में रेट रॉकेट 100%।
क्या भाई साहब, गेट सही प्राइस ट्रेंड्स at 99acres.com। घर लेना हो या बेचना, एक्सपर्ट से ही पूछना। 99acres.com।
Welcome back. Well, the market is surging now. 18,000 is in sight now. 17,904 and counting on the Nifty, up 78 points. This despite not too much of a contribution from the Bank Nifty, as the other heavyweights really have picked up. Mitesh Thakkar is back with us. Mitesh, it's been a bit of a nifty morning. Your views and your stock calls.
That's right, Anuj. I think between the financials and the index, I think the Nifty is clearly leading, and you've seen broadband participation coming in today, so that's a positive sign. We're still trading with long bias. I have a buy on Hero Motors. I think that's a stock which is breaking out of 2 weeks of consolidation. So keep a stop below 28.55 here, and a target of 29.60 on the upside could be the first target. And the other one is LIC. You were talking about insurance stocks. LIC is, I think, giving a reversal from oversold levels. There's a decline from 900 to 650, 660 levels. Some base building has happened, so this could be a good reversal. That's a buy. Keep a stop below 690 here, and a target of 730 on the upside could be tested.
Okay, thanks a lot, Mitesh, for that. That's on LIC, and there's some brokerage upgrades also coming in on that stock, so keep an eye out there. 0.5% higher for the index, but let's take a breather from equities and focus on the commodity markets. Manisha Gupta is joining in. Manisha, good morning.
Morning, Sonia. Thank you for that. I'm looking at the zinc prices because what a smart rebound we've seen onto that one. 2-month highs is where it's trading right now, above $3,700 a ton. It wasn't long back that we were trading at around 3,400 as well. So very strong rebound is what we've seen in the matter of last 1 month or so. In the Indian markets as well, the gains have just about continued. There are concerns of supply disruption as we see the high energy prices in Europe have led to unprofitability for smelters, and we have seen guidance for production continue to decline for 2022. The latest in the string of people who are cutting their production has been Dutch Nyrstar, which says that they are halting production starting from 1st of September. Glencore in the recent days has been voicing concerns as well when it comes to output. Their refined zinc production also has declined in the first half of 2022 and is expected to be lower in the second half as well. This is what the prices have done. We have seen constant gains onto that one. The weak Chinese data did weigh onto the markets 48 hours ago, but that has led to China cutting interest rates. That was a surprise coming from China. And then there also is conversation about stimulus, more liquidity that is going to be released for infrastructure and construction, and that is clearly positive for metals. The prices, as I said, have been gaining. We have seen prices gain up by nearly 3.5% in this week itself, and we are up nearly 22% in the matter of last 1 month. So strong gains continuing for zinc. This is the major reason that you have seen the zinc prices go up. The energy share as a cost of production earlier used to be 40 to 50%. Now it is nearly 80% of cost of production for zinc, and that is exactly what's weaving its way into the prices. You also have to take a look on the kind of capacity closure that we are looking at for this year. These are the reports that have come in from Macquarie. Last year was 138,000 tons of closure in sense of capacity. This year is estimated at 150,000 tons. Markets also are looking at inventories continuing to decline as well. Last year, if you look at the LME zinc inventories, they stood at 240,000 tons. It's just about 75,000 tons. And the markets do believe that with the kind of decline in production that we are estimating for Europe, you are going to look at lower and lower inventories continuing from here. So zinc clearly has been an outperformer, whether you look on a week-on-week, month-on-month, year-on-year basis, and that is how it continues to be.
Right, Manisha, thank you very much for that. Let's revisit the gas distribution space. MGL, IGL, Gujarat Gas, all under pressure. Sonal is here with more. Sonal, hi.
Hi, good morning. Well, yes, Mahanagar Gas overnight it cut prices. For CNG, it was cut by 6 rupees per kg, for PNG by 4 rupees per SCM. And now CNG in Mumbai is costing 80 rupees per kg and PNG at 48.5 rupees per SCM. Now, this comes after the government allowed greater allocation, that is domestic gas allocation to all these city gas distribution companies, which would have led to savings of around 15% for these companies. And that's why this steep price cut is what we are seeing across the board. Now, IGL and MGL, both of them have higher proportion as far as priority gas allocation is concerned. And these two companies were expected to cut prices because of that allocation. Companies have now passed on the price cuts, that's MGL in particular, and they will be able to maintain margins. So that's why some disappointment. Additionally, these companies had surged quite a bit this month after this announcement was made. For instance, MGL was up 20%, Gujarat Gas up 6.5%, and IGL up 25% just this month. And CLSA had put out a note on 11th of August where they said more domestic allocation is a near-term relief, that is in Q2. This may allow 15% cost savings for all these companies. But the bigger worry was whether these companies will actually pass on the price cuts or not. And they actually have gone ahead and done that. And that's why the stock reaction that we are seeing today.
Okay, Sonal, thanks a lot for that. Let's go across to Ekta now. She's tracking Aarti Drugs this morning. Ekta, over to you.
Thanks for that. Well, yes, Aarti Drugs is in focus because the government has recommended the continuation of the anti-dumping duty on afloxacin imports from China. Now, remember that Aarti Drugs gets around 8 to 9% of their sales from this particular intermediate/API, which is basically used to manufacture antibiotics, or this particular antibiotic. And the background is that the government had initiated a probe in 2021. Aarti Drugs was pushing for this anti-import duty. Now, remember that it was basically applicable 2017 onwards in terms of an anti-dumping duty, but it was never renewed by the government in 2020, 2021 once it expired. So after that, they had reinitiated a probe on this, and after gathering a lot of information, they have now decided to put the anti-dumping duty on this particular antibiotic API/intermediate as well. Now, the reason for that is because there was dumping coming in from China. There was undercutting of prices as per the applications by the companies. Now, in terms of the impact, like I mentioned, 8 to 9% of sales for Aarti Drugs comes from this particular API/intermediate. Now, the important thing to remember, however, is that while prices had fallen a couple of in the past 2 odd years for this particular ofloxacin API/intermediate, it has stabilized in the past couple of months at around 3,000 rupees to 3,100 rupees per kg, simply because of the kind of fluctuation that we've seen in the raw material prices. So because of that, there has been some amount of stability in prices, but the government has decided now to go ahead and apply that anti-dumping duty, which would provide probably some amount of stability and some kind of support to domestic manufacturers such as Aarti.
Okay, thanks a lot, Ekta, for that. Let's slip into a quick break. On the other side, our special segment, It's the Economy. Lata will get chatting with Anuj Podar of Bajaj Electricals, Mayank Shah of Parle, and Lalit Agarwal of V-Mart to discuss how the consumption pattern is panning out. Stay with us.